ECB rate decision this morning. It's very likely the biggest thing on the table today. The internet people will be at my house Friday, swap out some equipment, check the area, make sure there's not something wrong. It keeps dropping out. So if during this morning briefing we get disconnected, just sit tight. It usually drops out for a moment and then comes back again. It hasn't happened yet this morning, knock on wood, but I wasn't streaming, right? So we'll see. You know, I usually have reasonably decent internet, reasonably decent. I live in the country, so it's not like I have, you know, big city internet, but 1 gig speed, and it usually gives what I pay for. Just since that storm, something's been wrong. The last time it acted like this, we had broken lines in the neighborhood. That's a good one. It kind of feels that way. You know, I drove to the office, to the internet office yesterday. I was tired of calling people. And the lady was like, "What time did your internet go down?" I said, 1 o'clock. She said, "Yeah, mine too." I said, "Lady, you're the internet provider. You can't have your internet go down. What the hell? That's not how this works." So then I thought, well, I mean, if you're having internet issues and I'm having internet issues, it's probably not my equipment. It's probably you guys. Whatever. So a little bit of a rebound. Mixed bag. Everybody's waiting on Europe. Get some data. Hong Kong down mildly, 0.25%. Russell behind that. Dow Jones basically flat with the S&P. NASDAQ up 0.25%. Japan closer to 0.5%. We really need some data. The UK 100 is up more than 0.5% this morning. We're going to get a little bit of job numbers today. These aren't like the big numbers, but anything related to job numbers you want to pay particular attention to. It goes to the heart of the Fed and their mandate. When I looked at the Fed Watch yesterday, the September probability for a rate cut was at 90 something percent. It still is this morning. It's in the 90s for a cut in September. But there's been some talk, right? A couple of banks and key officials have come out and said, you know, you probably shouldn't cut yet. Maybe just wait a little bit longer. So I don't know. We want to continue to listen and see if they start walking that cut back, because they haven't announced a cut officially, so they can walk the rhetoric back or change the tone. And while that's not necessarily expected, we want to be listening for it and see if they're the chorus for more of these, hey, don't cut yet, start to rise. Otherwise, we are looking at a September cut. We do have QRA at the same time as this July FOMC meeting. All right, QRA is a two-part event. We'll get the first part on the 29th in the afternoon and on the 31st in the morning. So anything between now and then from Yellen, pay particular attention to that. We're going to get a chance to hear from a number of these officials. Remember, they're going to go into blackout mode 10 days before FOMC. So they're all trying to get out in front of that, say anything that they want to say before they go into blackout mode. And this is their chance to perhaps start walking that rhetoric back. It's worth catching that if you can. Now, I just use AI and get summaries after the fact. I don't really care to sit and listen to them chipping teeth. This is the ECB rate decision up here, and then around, what is it, 8:45, we're going to get the conference. It's just like Powell, right? First, we get the 2 o'clock press release, and then at 2:30, Powell comes out and talks. Only this will be, Christine Lagarde, ECB conference. We'll see what they got. We get the 10-year today. Another one of those sweethearts. Not supposed to have favorites, I get it, but the 10, it's kind of a big deal. Pay particular attention to this one at 1 o'clock today. It's not the only auction. We have auctions at 11:30, which implies we're also going to have one at 11, even if you don't see it listed here. I continue to stress that there are economic events that happen every single day that do not get listed here. And just because they're not listed doesn't mean that they're not important. For an example, QRA is never listed in any of these. And I mean, QRA is kind of a big deal. So if that's not on there, what else ain't on there? Yeah, it's kind of like that. Okay, well, here's a new one. I don't know that phrase yet, but I'm going to have to go figure out what the Crocodile Dundee effect is from JPY. That's got to be a good one. We'll circle back to that later. And Doji, waiting on data. Even the Nikkei Doji, everybody's just hurry up and wait. Contract change in oil, by the way. If you logged into your TradeAvate this morning and you have oil on your list, or even TradingView, I believe TradingView had an announcement when you log in that they're doing a contract roll in crude already. It's a pretty good gap that we got here. But with the contract change, normalization, what gap, right? If we were to change that, I'd say market and then normalize your chart. The NASDAQ is underneath the 10-day. The S&P is fighting that 10-day. And we have a surge cross under. So the way the surge works, price first crosses through the 3-period moving average, and then the 3-period moving average crosses through the 10. You can have a surge to the upside, or you can have a surge to the downside. This is a surge to the downside, obviously. We went down. On the ES, the 3-period is still above the 10, and price is still fighting with the 10. But on the NASDAQ, we do have a confirmed surge signal. It's not to say that it's going to continue to go lower, but in momentum dynamics, that's a very strong signal. It can be on any time frame, but since we're using it on a daily, because those are daily moving averages on my 15-minute chart, since we're using it on a daily, it's got different metrics, but that's why we use moving averages in pairs. Looking at the CPR, the central pivot range for today, it's a very wide channel. It's also lower than the previous day's channel. It's completely outside of yesterday's channel too. They're not overlapping like back here when this little channel was inside of this one, or even here where they were touching. Today's channel is completely isolated from the previous days. As a floor pivot, we've already hit it once this morning and tested it. It's this purple line here at 56.64. The bigger longer line here that is also purple is the weekly floor pivot, and we're underneath it. We don't spend a lot of time underneath the weekly floor pivot. If you go back and look throughout history, it's not saying that we don't go down here, just that we don't often spend a lot of time underneath that level. A wide channel today implies that if we attempt to break out, that it doesn't go anywhere. Just keep in mind that these channels don't make price do anything. They're more of giving us insight on what we should expect out of price. Now, we had that same discussion on this day with that really wide channel, and it tried to break out the bottom, which failed. So, that kind of fits with what we were thinking on a wide channel. Breakout should fail. Then we had that big run for the entire day, and it didn't break out the top. So, in theory, that fits and says, well, we didn't break out. It was a wide channel day, but what an amazing move we had that day, right? So here we are today, and this day that we're talking about was inside of a relatively wide day anyways. So there was a lot of room to run and still not break out. Today's the same thing. If we go to the upside, there's a lot of room to run to the upside and still not break out. Going from, 56.50 to 57.10, it's a 60-point run, and it still wouldn't be considered a breakout because we were still inside yesterday's range, but it could be a really nice trading day, even with the wide channel. And if it's not, well, a range day offers some really good trading. A sideways day, not so much, but a range day and a sideways day are two different kinds of days. When we zoom out this 56.40 or even 56.32 cog line, the low end of this range is really the breaking point. Spot Gamma mentioned yesterday that we were tangling up in the gamma level and the volatility trigger zone and how dangerous that was. Now, we don't have the AM edition yet, but even reading the PM edition from last night stressed a lot of caution at this level. Well, we do have the AM now. Yay. It just came out. I'll try to get that printed while we're talking through this. So we're at a critical, dangerous level. Breaking below that, the put wall is a long ways off. At least it was yesterday. So the threat is if we break 56.30, that we could flash crash, so to speak, down into, say, 5,500 and even 54.50 before we start finding some help or support. In the big picture, though, there is a lot underneath this that can help out. It's worth noting we're at last week's pivot point or point of control. Let's use that word instead of a pivot point. The point of control from last week is right there at that 56.32 cog line, and we're there, right? This is looking at things on a week by week basis instead of the 10-day and the day by day that we generally look at. If you use pure price method and you're looking for some longer term signals or bigger signals for a confirmed short, we don't have it yet. If you think about the pure price method, we need to break this last low with a new low, and we don't have that. We would also want a lower high, and we don't have that yet. So current price would need to break that low and set a new low, and then run up and set a lower high. Until that happens, we don't have anything trying to give us any sort of pure price method. We were just looking at a 24-hour chart. This is a daily chart, and same thing. we've got highs and we've still got higher lows. So higher highs and higher lows still says trending to the upside, not reversals. It does look like we're putting in a bit of a top, but until we begin to roll over, we don't have any downside signals. On the weekly, we're still sitting inside last week's range, which is really important just for that consideration of where are we? We're exactly where we were last week. Now, sure, we're under the 50% mark, and we closed last week really close to that 50% mark, which implied that we could have a struggle anyways. But if we're still inside of last week's range, then we're not bearish, right? We've got many examples where we had a week that stayed inside the previous week's range and everything was fine. We didn't crash and burn. Many examples of where we just spend a week going sideways. So, I've seen a number of people talking about getting all bared up and wanting to short all of the Mag 7 on a longer term swing basis. On a short term thing, this week, next week kind of thing, a 10-day trade. Sure, why not? Get what's moving. But I wouldn't try to short them for the quarter, say trying to get us into September, October kind of time frames. Not yet. We just don't have those kind of signals. And I mean, looking at it on the monthly, it's still very strong. We're still looking at some elevated volumes, not as high as we had yesterday at 147, but still above 100. And that's some significant volume that we haven't seen in a while. It's been quite a bit since we've had those sorts of numbers, but they're not hedging. So even with the European rate decision this morning, it wasn't enough to cause hedging in the ES futures. It does explain our sideways state and just reciprocation around VWAP. What we get to the upside, we're getting to the downside, and we're just holding this zone and hovering, waiting on this data. Since we're basically flat, there's really no edge in trying to identify if we're going to go to either of the ADR lines at this point. Ten-day, 30-minute volume profile. The point of control, as we talked about yesterday, is not expected to move anytime soon. It already was really solid because of this volume back here. And now we're giving it more volume. This is going to be our point of control for a while. At least the next week, maybe even up to the next 10 days. But for right now, for the foreseeable future, this isn't expected to change, which does imply that we're going to start to develop out more of a D shape. So we'll lose this little bit down here, and that'll narrow this entire field and really tighten up that D shape with the point of control in a more centralized position. Right now, it's acting as support. It's underneath us. If we happen to break, say, 5611 cog line and expand below this thing far enough, then try to come back at it, it will be a significant resistance. As long as we're crisscrossing it back and forth and we stay within a centralized field or a zone, say within this range, then it's no more support or resistance, or don't try to mix the two up. It's just a key level, like a zone or a range. But once we expand below it far enough and then try to come back up into it, it will act as a significant resistance. We won't be able to crisscross back and forth through it as easily as we're doing at this point. So what I'm trying to say is if we break down here today below this pivot point and we only get into, say, 5620 area, then we can come right back up and come right back through it again, like we did back here. Just cut back and forth through it like it's nothing. Don't believe that just because we cut below it, that it will immediately turn into resistance, because it won't until we expand far enough away from it and then come back to it. That might seem like a nuanced difference, but it's an important difference. We have a new VPOC this morning, so we'll just take this one. No, I should have looked a little further down the road. This would have been our VPOC. We've already hit it. So not a VPOC, just a POC. I'm going to keep this one on the chart for today. But since it's not a VPOC, just kind of adjust it a little bit. $56.41.5. It's where the greatest amount of volume took place yesterday. And when it comes to profiles, yesterday's is kind of important. This is a lowercase b, and the point of control is in the bottom portion. It's why today I'm marking it, carrying it forward, even though we've already hit it. It's just not a VPOC. It's a regular point of control. But I think this is an important level today, so I'm going to carry it forward. Yesterday's low is also obviously an important level. I think this one's more important. When it comes to yesterday's low, it's also this low from last Thursday. I mean, it's not perfect, but in that zone. So there's a lot of structure down here anyways. That 5632 cog line is down there. We'll let that cog line speak for itself, and this will just be an added piece. We are outside the weekly range. Excuse me, that's the wrong chart. That got adjusted. The Qs are outside their weekly range. The ES is still within the week. So we are exactly where we should be. We're underneath Friday's close, but we're still within the range that we were expected to move within. We're at the 10-day, which we've already discussed. We're negotiating with it now, kind of interacting with it. We could expand below it like we've done before, 0.5%, maybe a little bit more. But generally speaking, we've spent most of the year above this 10-period moving average, and it's what we would expect now. If we're getting a reasonably decent pullback, say like we got here with that 5 to 7% move, that's a good, decent, healthy pullback. Then we could get below the 10-day moving average, a good 1.5 to 2%. But unless we're going to get that kind of move, there's no reason to suspect it's going to be like that. And I'll put the quarter on there. That was a new quarter. And within 2 days of that new quarter, we had that really a change in market dynamics. The narrative changed, money flows changed, inflows on ETFs, QRA and VC funds, like everything changed. We don't have that this quarter. And we're already more than 2 weeks away from the new quarter. This was an immediate change. As soon as we got the new quarter, 2 days later, down we went. So not the same, right? looking at how far we are from the 10-week, we're still in the sweet spot between, say, 2 or even 1.5 to 3.5. That 2% zone is our sweet spot. We're fine. We're not overbought. We're not overextended. We haven't moved too far, too fast, and we're not due for any more of a pullback than we've already got. It is worth saying, by the way, when it comes to this pullback, if you use something like the RSI Laguerre, it measures markets in a way that we haven't really measured them before, and it uses phrases we don't normally use, like energy. Generally, when you think about markets, it's momentum and inertia, not energy. And when a market makes a move, it can make a move to get energy, or it can make a move with energy behind it. The analogy that I use is if you are out in the yard throwing a ball around, you're putting energy into the throw, and as the ball moves, it's losing energy. I mean, that's just common sense stuff, right? You take the ball to the top of a tall building and drop it. Well, now as it moves, it's picking up speed, right? It's picking up energy. So using the RSI Laguerre, one of the things that we learned about markets when they are going sideways is that they can build up energy really fast. But that wasn't really too revelationary at that point. You know, like, oh, this is neat. We learned something. What we also learned, though, is if we get a very sharp, fast move, that can also pick up energy. That can build energy up. So if a market, burns a move, burns energy in a move, and then sharply pulls back, what we would think is profit taking, pulling back to the 786, doing what markets do, right? They run up, they pull back, run up, pull back, run up, pull back. If those pullbacks are sharp enough, they're actually building up energy. We don't know yet for sure if that move yesterday was a move that was building up energy or if it was a move that was spending energy. I haven't turned on the RSI Laguerre yet to look at it today, but it's another reason to think about these pullbacks as more than just a threat or, a short. Because otherwise, if this is building energy, then it just recharged after this really nice run, went sideways where we were digesting the run. What was we calling it? A correction in time. Well, if that pullback was to get energy, it's fully loaded, ready to go. And we could come out of the top of this range and continue on our way. Amazon yesterday broke underneath the 50-period moving average, climbed back up through it, and is now right at that 50. Microsoft yesterday tagged the 50-day moving average, bounced off of it, rallied back up. NVIDIA got close. It didn't hit it, but it got close. Facebook is completely underneath the 50-period moving average. Netflix, and it's kind of iffy. And they report today, by the way. They were talking about Netflix this morning on Bloomberg, mentioning some money that Netflix is going to make from its subscribers, their continued crackdown on password sharing. And remember, Netflix, it's not just whether or not they made money, right? They've announced good quarters before, but also during those good quarter announcements, mention that their subscriber numbers are down and the stock just tanks, right? It's not about how much Netflix is making or how their quarter went. It's just that widget number, subscriber numbers. If their numbers aren't what investors want to hear with those subscriber numbers, then it's going to go down. So money wise, it sounded really good when they were talking about it on Bloomberg this morning, but I'll just stress that caution. It's not the money. As silly as that sounds, right? It's not the money, but they're going to report. Netflix is often called the account killer. It has a history of making outsized moves far beyond the expected range for the earnings result, right? We can measure a market's projected move for earnings, and they're usually pretty accurate, but not for Netflix. Netflix has a history of outsized moves. You can play that, right, with a lottery ticket, just get some very far out of the money options, because if it is one of those, it will be significant. A 21% gap, 21, a 29% gap here, right? We're not talking about like 2.9%. We're talking about a 29%. That's a big move. So this thing, has that kind of history. Here's a 6.7%, a 10%, 16%. So you kind of get the idea, right? This thing it can move. Now, is it going to move that much? I don't know. You don't know. Nobody knows. Its market maker move right now is $50, and the one standard deviation is $16. Put those two numbers together, you get about $66. That might sound extreme, but it moved $107 on that earnings and $103 on that earnings. So, $58 on this earnings and $63 on that earnings. So it can do it. Whether or not it's going to, here's another little thing that I think about when it comes to earnings. When it misses big, up or down, right? And we get the big gap. Everybody who likes to trade those kind of earnings who didn't, they say, oh, dang, I should have traded it. Look how big this thing moved. And so the next time, everybody piles in it hoping for a big move. They get tired of wasting their money when it doesn't make big moves 4, 5, 6 earnings in a row. And you can see in the implied volatility for each earnings. After that really big move, IV was huge for the next earnings, thinking, oh, wow, it was a minus 29% move last time. Maybe it'll move really big this time. So we get a really, really high implied vol. And then what do? Nothing, because everybody had it hedged to the eyeballs. It didn't move anywhere. 3% move. So the next earnings, lower IV, another small move, lower IV, lower, 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 because we weren't getting those big outsized moves again. Then we got a reasonably decent outsized move, about 17%. And now we're not getting lower IV necessarily, but it's a little lower. But it wasn't dropping as strongly as it had been, kind of normalizing again. And we can see this trend back here too, where we had a really big miss. So IV was high for a couple of quarters. We didn't miss consistently. So IV fell, had an outsized move. Things start to pick up again. And we're just completing that cycle again and again, right? The point is, if we haven't had one in a while, we could absolutely get one this time. So, lottery tickets are supposed to be cheap. A far out of the money lottery for Netflix, say you risk 8 to 10 pennies, right? A $10 scratch lotto ticket. You don't want to risk, 500, 700, $1,000 on a scratch lottery ticket, because that's not a lottery ticket. That's just straight up gambling with some money. I don't know, maybe throwing $1,000 on it to you would just be a $10 scratch lotto for me. But I don't want to gamble with $1,000. Looking at what's down this morning, we really don't have anything in the down category. Looking at what's up, basically everything. Bitcoin's up, but not enough to reach our benchmark. Same thing with the China ADRs. When we start getting into things that are up enough, the Mag 7 is up enough. Semiconductors, which TSM helped out and gave a boost on the semiconductor side. So we got gold miners, technology, semiconductors, the Mag 7, and then everything else is starting to lift a little bit. There was a lot of discussion about the broader market rally coming up. And right now, the only worry or concern or angst is if the Mag 7 falls, will the broader market still rally? So a lot of analysts are hoping that the Mag 7 doesn't necessarily fall, they just stop rising and the rest of the market gets a chance to catch up. So RSP is the equal weight ETF. You can kind of on Thinkorswim run something like SPY minus RSP. It's better if you could do a division or use a ratio chart. Thinkorswim's got a price ratio that you can add. All right, so this, irregardless of what's happening on the upside, this, so we could put anything up here. This isn't reading it. This is just looking at what we have on the chart. SPY and RSP. This is the concern. If we get a very quick change in structure and we get everybody chasing after everything that was down, is the Mag 7 going to be able to hold up or not? That's kind of the concern. So if they stop falling, start going sideways, hold that 50-period moving average that we were looking at on a lot of the Mag 7s, that's all they have to do. They have to just hold the line and the market will take care of itself from there. If we lose the Mag 7 though, and they continue lower, then it won't matter if Coke wants to rally, right? Or I don't know, McDonald's, Starbucks. It won't matter. If the Mag 7 tank, there won't be a broader market rally. So they need to pause or find support, stabilize somehow, somewhere. That's why I continue to look in this group, right? Under the 50, we obviously have the 200 down there. They need to not just crash and burn. So semis are up this morning 1.3%, but they're still inside of yesterday's range, and that's going to be a significant level to get through. Putting it on a daily chart, which is what we have here on the right side, measure that really big bar and mark the half point. It's at 263. Nice round number. We have to get through that. But when we zoom out, this is a significant topping pattern. We were just talking about pure price method and how if you get a lower high and you get a lower low, that's one set. We need two sets. So we would look for this to run up and set another lower high and then break that low with a new low and set another lower low. And then you have a full set, two lower highs and two lower lows. That's a full set, a trend to the downside. We could also use things like moving averages, but combining moving averages with pure price methods work pretty good. We're still a long ways from the anchored VWAP of the year. So if we were to fall, we've got plenty of room to fall. And looking at where we started the year at 172, this thing could fall all the way to 220 and it would still be up on the year. GDX gold is up, but this is another one that's sitting inside of yesterday's range. And yesterday's range, while it's not massive, it's still the level that we have to get through in the short term. Same thing, mark the 50%. It's 38.9. We got to get above that. Then we got to get above the round number $39, expand beyond 39.50 to really get a breakout that can continue. It is worth noting the 50% mark of this really big breakout bar. And as long as we're holding above that, which it seems like the market's really struggling to keep that level, then this bigger breakout that is measured here is still good. Let's hold that breakout though. Biotech, same thing. We're inside previous day's range. Mark the half back. And uranium, I mean, that move, we're underneath year-to-date VWAP. We've got this massive candle. We might be up this morning, but I mean, there's no bullish impulse to this, right? That's just finding its footing after this massive move. Same thing with the Qs. Sure, we're up this morning, but we're not even through the half back, and that was a really big sell-off. So these ones that are up, a lot of these look like a little bit of a bounce, after a big move to the downside. I'd say let the data come out. See if the European press conference with Christine Lagarde changes anything. Otherwise, we're going to hear from some Fed speakers, and we've got the 10-year tips, and that one can change things. Watch for how the market changes at 11:32 after Europe closes. If we stay sideways through most of the morning and the news from Europe is what is holding us back, then once Europe closes, we could certainly come out of this range for the afternoon. We've seen that happen so many times, right? Where we go sideways until 11:30, then like just flipping the switch, we take off and run. Everybody, be careful, be safe, have a good day.